And look, if you have been watching the news lately, you might feel a specific nagging vibration in your bank account that suggests the sky is falling. The headlines are screaming that Wall Street is dumping houses. Yeah, that just happened. Wall Street ain't buying no more, they said this week. And we've got the government trying to trap you in debt until you're 100 years old. And the tax man is coming for your backyard. And usually, I am the first person to hand you a helmet and tell you to duck. But today, I'm gonna tell you to grab a catcher's mitt. Because while the mainstream media is busy hyperventilating about a housing crash or a debt trap, they are missing the forest for the trees. In the last 72 hours, the tectonic plates of the housing market shifted. Yes, but if you know how to read the seismograph, you realize this isn't a disaster. It's an opening. We have Wall Street finally stepping back, a new mortgage tool that, if you don't use it like a dummy, could actually be a ladder, and a clear picture of who the actual enemy is. Spoiler alert, it ain't the bank, it ain't the Fed. So, buckle up, strap in. We need to talk about why Wall Street selling is actually good news for you, why a 50-year mortgage might be the inflation hack of the decade, and how to dodge the real bullet, taxes and insurance, so you can build the kind of wealth that makes renters weep. Let's start with the big scary headline. Invitation Homes is selling. For the last decade, the narrative has been Wall Street is buying all the houses. They are the new feudal lords. You will own nothing and be happy. And that was true until literally 3 days ago. You didn't hear? Yes, on November 17th, 2025, Invitation Homes, the Godzilla of single-family rentals, held its investor day. Contrary to popular belief, it is not BlackRock. It is not Blackstone. It's Invitation Homes. And amidst all the corporate jargon about synergies, they dropped the fact that they are now a net seller. They sold over 1,500 homes recently. They are capital recycling. The doom and gloomers are going to tell you that this is the end. They'll say smart money is getting out. The crash, it's here. But let's look at this with an investor's brain, not a clickbait brain. When the biggest hoarder of starter homes decides to release inventory back into the wild, that is not a crash. That is a pressure release valve. For years, you've been competing against hedge funds with cash offers. Now, they're stepping back. This releases pressure on the first-time homebuyer market. It opens up inventory, which is what we've wanted. It might even soften prices just enough to let regular human beings back into the game. If you're already a homeowner with equity, hey, you're fine. You have a fortress. But if you have been sitting on the sidelines waiting for a crack in the wall, this could be it. The smart money isn't fleeing because real estate is bad. They're fleeing because their specific algorithmic model needs higher yields. You are not an algorithm. You are a human who needs a place to live and a retirement account. And that brings us to the government's new solution, which everyone hates. But I kind of like it. You've seen the headlines. The Trump administration and the FHFA are floating the idea of a 50-year mortgage. And the knee-jerk reaction from the Dave Ramsey crowd, God bless y'all, is debt is evil. You'll pay for 50 years. You'll pay $1 million in interest. It's a life sentence. Look, if you just sit there and pay the minimum for 50 years like a zombie, yeah, it's a terrible deal. The math is ugly. You do pay double the interest, but you are not a zombie. You are a strategist. Viewed correctly, the 50-year mortgage is not a life sentence. It's a bridge. Right now, interest rates are the barrier. Prices are high. You can't qualify for the monthly payment on a 30-year loan. The 50-year loan lowers that monthly obligation just enough to get you the keys. And here's the secret. You date the rate. You marry the house. You don't keep the 50-year loan for 50 years. You keep it for 2 years. You keep it until interest rates drop by a half point or so, because that's all it will take to make the two payments even. Then you refinance into a 30-year or maybe a 15-year. It's a tool to get you into the asset now before prices run away again. And there is a deeper economic argument here. It's called inflation. You see, we live in a system where the dollar is designed to lose value. It's programmed in to lose value. That's not a secret. A dollar today buys less than a dollar did in 1990. I mean, it buys less than a dollar bought a year ago. When you take out a 50-year fixed rate debt, you are freezing your housing cost in today's dollars. Meanwhile, inflation is eating away at the value of the money that you pay back. In year 20 of that mortgage, you are paying back the bank with dollars that are worth significantly less than the dollars they gave you. You are essentially shorting the dollar that's been guaranteed to fail. It's guaranteed, it's programmed in, it's going to. The longer the debt term, the more inflation works in your favor. I mean, give me a 100-year mortgage. So is it a sucker's bet? Only if you don't understand inflation. For the educated investor, it's a hedge. So if the mortgage isn't the enemy and Wall Street selling isn't the enemy, who is? It's the people sending you the bill that never goes away, even after the mortgage is paid off. Taxes and insurance. Look at Chicago. This week, homeowners in Cook County got hit with a property tax nuclear bomb. Commercial real estate downtown has collapsed, the urban doom loop. So the city just decided to shift the entire tax burden to the homeowners. In neighborhoods like North Lawndale, tax bills went up, get this, 98%. In West Garfield Park, 130%. This is the real threat to your wealth. It's not the interest rate. You can refinance a rate. You cannot refinance a tax hike. This is the government solving its budget incompetence by treating your home equity like their personal ATM. And then look at California. State Farm just got permission to hike insurance rates by 20% because they are in financial distress. Other insurers are leaving entirely. You're getting crushed by both ends. The government wants to tax you and the insurers want to drop you. Now, I know what you're thinking. Matt, you just told me taxes are skyrocketing and insurance is failing. Why on earth should I buy a house? Because what is the alternative? Renting? Do you think your landlord is going to absorb those tax hikes? Do you think they are going to eat that insurance cost? No. They're going to pass every single penny of it on to you in the form of rent increases. And unlike a mortgage, rent never ends. Rent never gets refinanced. Rent has zero tax benefits. Here's the statistic that really matters. The average homeowner is 40 times wealthier than the average renter. 40 times. Not double, not triple, 40 times. Real estate is the only investment vehicle available to the average person that allows you to leverage the bank's money, hedge against inflation, and get tax benefits, all while satisfying a basic biological need for shelter. No one who bought a home 30 years ago and held it is crying today. They are sitting on a pile of equity that funds their retirement. The only people crying are the ones who tried to time the market or listen to the people saying it's a bubble in 2015. Mr. Robert Kiyosaki, you are not crazy for wanting to buy. You are biologically wired to seek security and shelter. And despite the taxes, despite the insurance chaos, owning the asset is still the only way to win this game. So, how do we play this hand? Because we don't fold, we play smarter. So here's your battle plan for this specific market. Action step 1, the bridge mindset. If you're a first-time buyer, or you're helping your kid buy, do not be afraid of the 50-year mortgage if it's the only way to get the keys. Use it to lock in the price of the home. But have an exit strategy. Watch the rates like a hawk. The moment rates drop a half to 1 point, you refinance. Treat the 50-year loan like a rental car. I mean, it gets you there, but you don't want to keep it forever. Action step 2, follow the net sellers. Invitation Homes is selling. Find out where. If they are offloading properties in Atlanta, Phoenix, or Tampa, those markets might see a temporary dip in competition. That is your buy window. Go where the big dogs are leaving crumbs. Action step 3, tax defense is mandatory. If you own a home, you can no longer ignore your assessment notice. When that letter comes from the county, you appeal it every single time. Do not let them assess you based on market vibes. Make them prove it. I mean, in Chicago, the people who didn't appeal got crushed. The people who did saved thousands. This is part of owning the asset. You have to defend it. Action step 4, the insurance audit. Before you make an offer on a house, check the insurability. Call a broker. Ask, is this in a fire zone? Is this in a flood zone? Do not buy a house that is uninsurable. The volatility in insurance is the biggest risk to your monthly cash flow right now. Vet it before you sign. Listen, the system is changing. The rules of debt are stretching. The rules of taxes are tightening, and the big institutions are shuffling their decks. But the fundamental truth remains. You need to live somewhere. And paying your own mortgage is always mathematically, historically, and emotionally better than paying someone else's. Don't let the headlines scare you out of the greatest wealth-building vehicle in history. Just be smart about how you get in. Use the 50-year loan as a tool, not a crutch. Use the institutional selling as an opportunity, not a warning sign. But realize that once you have the keys, then the game changes again. The threat isn't finding the house anymore. It's the invisible ecosystem of tax assessors, data brokers, and insurance algorithms designed to chip away at your equity while you sleep. Most people treat their home like a piggy bank, but the system treats it like an ATM they can withdraw from whenever they want. And that's why I made this next video for you to watch right here. I break down the specific blind spots, from property tax overcharges to privacy leaks, that most homeowners completely miss until it's too expensive to fix. It's about running your home like a fortress instead of just paying the bills. And you'll see exactly what that 60-second audit looks like in this one right here. I'll see you there.